Good day, everybody. I think we've got callers joining us from all over the world. We wouldn't want to have it any other way because this is a global collaborative ecosystem. Uh, my name is Jason Dodier, Chief Commercial Officer and co-founder of the Grain Ecosystem, where we have a relentless focus, as many of you know, on unlocking value from biomass waste, scaling biochar, moving carbon markets, and really trying to connect the dots as it relates to developers, capital, stakeholders, data infrastructure, you name it. And we're aiming to offer a platform and a solution to accelerate project readiness, unlock capital, and provide traceable outcomes, many of which are going to be uncovered in today's session. I want to thank everybody for joining this today. As you may have seen, the name of this session is the Green Bridge, Non-Traditional Finance for Biochar and Nature-Based Carbon Solutions. What does that mean exactly? Well, today, we've seen the space emerge as part of a movement that's redefining how capital has flowed into nature-based climate infrastructure, and particularly biochar projects. And I'm especially excited to be joined today by a great friend and partner, Adam Fraser from Terraset. You're going to hear a lot more from Adam today, but they're essentially a nonprofit that is pioneering the deployment of philanthropic capital to fund high-impact carbon removal projects. To give you a little bit of background on the run of show for today, so we set the table appropriately, we are going to dive into critical challenges for the carbon removal sector. I talked a little bit, you've heard me speak at length many times about the financing gaps, limits to early stage deployment, and traditional capital markets often shy away from early risks. They leave promising projects like many of yours stranded before they can even prove the impact and generate revenue. And that's really the ethos of today's discussion. Non-traditional financing, philanthropic dollars, concessionary capital, and bridge funding to catalyze project viability and scale. So together, Grain Ecosystem and Terraset are going to illustrate today how innovative capital structures can unlock durable climate impact while supporting rural economies and sustainable development. We're going to start by exploring the financing gap from both of our perspectives. Adam's going to speak a lot more detail about philanthropy-backed deployment. And then we're going to look at different parts of the capital stack. And finally, we'll explore how new collaboration models, policy considerations, and transparent MRV systems are going to play a crucial role in unlocking faster, more efficient capital flows into nature-based solutions. And we're going to encourage you to engage with us throughout the session. We're going to have a live Q&A, so please enter your questions. We're going to do the best we can to make sure as many of them as possible get addressed. And then, as usual, for those that do not get addressed, we will handle those offline and make sure that we get you the answers you need. Now, without further ado, over to Adam Fraser to formally introduce himself, share a bit more about philanthropic capital, and the Terraset perspective. Adam, welcome, and please do kick us off here.
Thank you, Jason, and the whole Grain Ecosystem team, and thank you everyone who's joining. Jason, you said that you guys connect dots. That was one of the things that jumped out to me in your intro, and I think that it's such a crucial role in this work, and we will get onto that. But our part of this puzzle. Terraset is a nonprofit that uses philanthropic capital to catalyze the carbon removal industry. So we raise money, like any nonprofit, we raise money as tax-deductible donations from individuals, foundations, family offices, donor-advised funds, and then we deploy that money. And primarily in our case, we deploy it by making strategic purchases of permanent, high-quality carbon removal from innovative projects and companies. And I should say those are our pre-purchases. We'll get into some nuance here, but at the core of what Terraset does are pre-purchases. We pay now upfront at the time of contracting against delivery later. And we don't just do this because we think CDR is a philanthropic endeavor. I think that's really important to say up front. And we don't do it because we think philanthropy can solve all of the financing problems in CDR. But we think that we need to rapidly accelerate the deployment of all sorts of permanent high-quality CDR And to do that, we need a lot of different forms of capital. And we need policy change, and we need corporate buyers, and we need investment, and we need debt financing. We need all of those things. But our piece of the puzzle comes from the fact that of around $900 billion per year in global philanthropic capital, only 2% is allocated to anything to do with climate related issues. And that includes everything from sustainable fishing to animal welfare to planting trees. Anything to do with what's categorized as environment and animals, if you look at Giving USA's report. And then of that 2%, it's less than 2% is dedicated to greenhouse gas removal. That's what you see on the slide there. So Terraset exists to channel more philanthropic capital into the industry, not because we think it's the answer to all the problems, but because we think of a market that in the US is worth more than $1 billion a day in terms of donations to nonprofits, needs to be put to work in the climate crisis as the biggest challenge of our time. So by doing this work, individuals, foundations, DAFs can support, we believe, the most ambitious and impactful carbon removal projects, climate projects in the world. They can build and shape the future of this market. And it lets us maximize donor impact. It lets us stimulate ongoing investment. It unlocks lots of co-benefits. All this is the script. And I would have said the same thing to you when we met, a year or so ago. And in fact, I think I did say it, and you said, that sounds great. You need to be funding biochar, which at the time we hadn't done. And then you probably said the same again when we saw each other at Climate Week. We did the interview a while ago. And so it's really exciting that now working with you, we are funding biochar actually in a couple of different ways. We'll talk about at least one of them a little later. But no, that's Terraset. We want to help catalyze this industry. We want to be a vehicle for people who want to invest in a tax deductible way or to donate to support this sector, to support the projects, the suppliers who are the developers who are bringing this work to life, and to be part of the ecosystem.
And Adam, really simply, for those that might be new to pre-purchase and particularly the Terraset approach, can you explain at a very high level what that process typically looks like, and what the definition is around pre-purchase from your perspective? Because we know, you and I have talked about this at length, donor advised funds are unlocking a new dimension of, I would say, philanthropic agility in terms of allowing these donors to find a custodian. You and I both sit here in New York City, and so many family offices and impact investors are looking for custodians like Terraset, but they can also benefit from tax efficiencies and simplified administration. So from the moment that LP money hits and you're analyzing a project, can you just highlight what some of those terminologies mean for the developers on the call?
Yeah, I'll answer that in a couple of different ways. I think you touched on a couple of points there. So one is Terraset's role in doing this work in a tax deductible way. We are a 501c3, a nonprofit, despite my accent, a US registered nonprofit. We receive funds and the donor receives a tax receipt. Or in the case of a donor advised fund that needs to donate to a 501c3, that's what that money has to go to. We are a 501c3, we can receive that money. We then take that money and we are the ones acting as Terraset, as ourselves, who go and put that money to work with carbon removal companies. I said we primarily do that via pre-purchases. I will come back to that definition, but we could do that in all sorts of different ways. We can make grants. We have done some work in that space. We could be looking at venture philanthropy. There are all sorts of ways we could move money. The reason we do pre-purchases is because we believe they are really catalytic. They unlock follow-on funding. They move money to companies now, which a lot of people on this call who are early stage companies or have been or invest in them, they know how important securing that revenue is. And we pre-purchase by buying, we also become a customer, right? We are not just making a grant to the company and saying, okay, good luck. We are becoming a customer, buying the removals, the credits that they plan to deliver. And therefore, we're proving their model a little bit more. We're revenue on their balance sheet for investors. We're revenue on the balance sheet when it comes to looking at project finance. We go through the whole process. We know, therefore, like this is what the experience is like buying from them, which is something that other buyers come and ask us about. And they say, we see you purchased from this company. How was that experience? The pre-purchase itself, that definition you asked for, means we contract now and we send the money now. We say to a company, we want to pay you to remove 10 tons, 100 tons, 1,000 tons of CO2 from the atmosphere on the schedule agreed here, which might be, depending on the methodology, the technology, that might be something they'll do this year. That might be something they're building to be able to do over the next 5 years. But we agree that schedule, and then we pay the money and we wait for the delivery to follow and the company to report back on us. We don't sit and say, then there's nothing wrong with this. This is another incredibly important part of the capital stack, or the kind of the necessary investment. We don't say we'll hold this money and we'll pay you if you deliver this in 2027. We pay now, and we trust that that will happen. And again, that's one of the things that we can do with philanthropic capital. We can be a little bit more flexible than other buyers perhaps might need to be, because this isn't a carbon accounting play for us. We're not buying and selling and trading credits in a way of doing that. So so that's pre-purchases. It's one of the ways that we deploy, and it's the main way. We also have, as you pulled up on the slide there, we recently launched a revolving fund, which is, I can get into this in some more detail maybe a little later, but where we pre-purchase now, and then when we take possession of those credits with the revolving fund, we can look to resell them to corporate buyers and invest that income back into more pre-purchases. That's not what we generally do. We've generally focused on, we'll pre-purchase credits, and when they're delivered, they'll be retired, and we receive a donation and we take CO2 out of the air, and that's the end of the matter. The revolving fund aims to make that more sustainable and more of a cycle. It's backed by the Schmidt Family Foundation. It's working with already some amazing project developers in the space. So that's exciting. We've also received some government grants that we've used in the biochar space as well. I'll come on to those. And we're really looking at any way we can drive capital and fill a gap that's needed in the space.
Adam, you're filling a major gap. And as I hear you talk, and I think most people around the world will recognize the Jerry Maguire movie, Show Me the Money, basically. And that's what I'm hearing, because at the end of the day, receiving funding is more than money. It's the fuel that transforms ideas into impact, and your ability to do that. And you've been, we're going to talk about examples later on, has been immeasurable in terms of the progress. And what I love about your definitions and how you shape things, Adam, is in a world full of noise, clarity typically cuts through and drives results. And you've always been very, very clear and transparent in terms of how you all work. You hold no punches back, and I think that's helped move the market forward. Now, building on your framing, and as our mutual friend and one of the founders of Terraset, Chris Wedding, often talks about, it's one of my it's a thing that captivates me, is the Stockdale paradox. Real progress typically begins with a clear-eyed understanding of today's challenges. So developers who endure aren't just hopeful, they tend to be relentlessly realistic, which is very important. My mindset and the way our team works at Grain, Adam, to kind of build on to what you're talking about when you look at these projects, is we're aiming to provide both the grounded support to navigate complexity and then the conviction that scaled impact is possible. So for biomass-to-carbon developers, the valley of death is very real. We're going to talk a lot more about the valley of death in terms of the demands around significant upfront investment, and then the feedstock aggregation and the technology validation, et cetera. Early stage funding is catalytic, but the risk tolerant capital has to validate the different underlying elements. And at the same time, the science is clear. I think that we're out of time for incrementalism. Market forces alone aren't going to scale these solutions fast enough. So early stage capital, as you're saying, doesn't just bridge the gap. It's going to accelerate innovation, set higher standards, and hopefully get us both the momentum and meaningful impact. So I'm going to come back to you now to talk a little bit more about friction points. So you've had a lot of experience now, especially in the last year as you and I continue to talk. What are the biggest friction points, Adam, that you see in financing these early stage projects? Again, we're trying to run projects through a grain process to make it as frictionless and easy, but there's still a lot of elements. And hearing from you directly around some of those mismatches and points, I think will be really helpful for the developer community and investors that are looking to bolt on.
I mean, just to say, you touched on something really important there as well, which is the urgency of this work. Like, and we always say, carbon removed now is worth more than carbon removed later. Like, we need this to happen now. We're at different tipping points, and so it's incredibly valuable for all sorts of reasons. In terms of those friction points, those barriers, maybe I'll go back a step. We did a supplier survey at the end of last year. We published the results at the start of this year. I'm just thinking of the timelines there. But a few months ago, we talked to more than 50 carbon removal suppliers across a whole range of methodologies. So it involved biochar, but also direct air capture, BECCS, ocean-based CDR, a whole range of companies and methodologies. More than 90% of them cited securing early stage funding as the biggest barrier they face. I mean, maybe that's true in any space where you're launching a startup, that's really hard. But whether as purchases or in different forms, they were finding it hard to find buyers, hard to find debt capital, hard to find investment that matched up. I think there's probably a whole range of reasons for that, right? And if you look at this space as an investor, you look at it as a customer, you look at it in all the different ways you could put money in, you get slightly different answers. But across the board, you would probably say finding the most impactful, most high potential carbon removal projects is difficult. It's time consuming. If you're a corporate looking to buy, you might be a sustainability team of like one or two and have a lot of things on your list that are not just carbon removal. If you are an investor, you probably have a portfolio of things where you've got different expertise, and this is a new space. So it's difficult and time consuming. And again, we would say as Terraset, it rarely comes with a tax benefit. Like, we provide a way you can do this work with tax deductible funding. I think from an investment perspective, the timeline and the ROI question is difficult. Something might be incredibly impactful, but have a longer timeline than certain, VC funding or another form of capital might need. It might return a strong ROI, but not at the percentage level needed. And it's also a young space. So a lot of the deals aren't necessarily at the size that can attract some of the money that's needed. I've talked to people who kind of say, this becomes interesting to us at $100 million, and below that, it's not worth my team's time on the paperwork. So there's some mismatches there. The space is getting way better in terms of data, but that you would still say that data is not always standardized. It doesn't always follow the same form. So people don't necessarily know if they're comparing the same thing. And if you're looking at different forms of carbon removal, there is some comparing apples to oranges and looking at what the reasons for looking at those different options are. Yeah, I could keep going, but I would say another is just that barrier of doing the due diligence on it. What are you looking for? How do you know this is a good project? That's part of the reason in Biochar why we've really enjoyed working with Grain Ecosystem, because you guys have already done a lot of work with projects who you've onboarded onto the platform, who you know them inside out, if you want me to in this conversation, it's maybe not the best use of the next 20 minutes, but I'll happily go through our due diligence process in depth. But I think it's really worth saying you have a really strong due diligence process, and where in this space we can, different buyers, investors can look to take advantage of each other's due diligence and join things up. That saves us time. It also saves project developers going through the same process multiple times and answering the same questions to different people with a slightly different twist. And I think, again, I'm all for saving people time in this work as well.
Well, and Adam, whether you know it or not, I'm monitoring the chat, obviously, because to me, and my commitment always is to have an engaging webinar which connects beyond the screen, right? So
Mm.
our goal today is to spark curiosity, invite interaction, and leave a lasting impression, hopefully for action. There's one of the questions to call out that you were kind of alluding to is, can you share a little bit more in terms of some of the other elements of the diligence process to basically drive execution? Obviously, the goal is to take a project through the grain process. I'm going to talk a little bit more about that. But from a Terraset perspective, let's say you go on the grain investor view, you find a project you really like, it's gone through our process. What then would be some of the next steps? And obviously, we're going to look at some projects, live in a little bit, but maybe for the audience to understand, because I'm sure there's going to be a few developers here that are going to want to go through that in the very near term. So maybe just build on what you were saying to give a little bit more confidence in what that might look like.
Yeah, I said I would do this in depth, but I'll try to do it fast. We have an open application process as Terraset. We've had that since day one. Anyone can complete our intake form and say to us, "This is my project. This is how we're taking carbon out of the atmosphere. This is the funding and the support we need." We then have assessors who look at those. They score them against the rubric of the criteria by which we're assessing projects, which will be very familiar to people in this space. We want to make sure that the carbon that's removed is additional, scalable, validated, verifiable, ethical, catalytic, various other criteria, which are all on our website. And we also have let's call it an advisory board, our Carbon Council, which are experts from within and outside carbon removal with a different range of expertise, and they're looking at our overall portfolio makeup and saying, "Oh, well, there's a gap here. Oh, you could look at this. There's this happening." Or they might be looking at a particular area where they have expertise. We might ask them a particular scientific question, a particular financing question, depending on their expertise. And between every project that comes in through that application form gets scored against that initial rubric, so we can look and say, okay, this could be a fit for us. And we then try and match up those two things of the advice we're getting about our portfolio makeup, what we're seeing come in, and then, of course, the wishes of our donors and where money's coming in from and what restrictions there might be around that in terms of geography or methodology or different things, to then take people further forward to a more in-depth due diligence, where we'll be looking at, again, at those criteria and a company's chances of making it. But we're also really keen to look at where we can team up with other people to make sure that we're, as I said before, like maximizing the information that we have and minimizing barriers and friction. So again, Grain Ecosystem, having done a lot of that initial stage with your own onboarding of projects, means that we know something that's on your platform is not just a pipe dream. It's not just something that's never going to have any chance of coming to fruition. That's landed in our inbox.
The randomized email with the Excel in a couple of pages. I mean, those days are
exactly.
It can work in rare cases, but those days have gone by the wayside.
And I think that it's something that we're all trying to figure out in this space, where sharing information can have the most impact. Where are the pre-purchases we're making and the information we have there more relevant to then people who are doing offtake agreements or people coming in on the top with investment? So I think we have lots of anecdotal evidence of those things happening that we can talk about, but it's where we can collaborate on those things is something that will drive greater growth in the sector faster.
And Adam, while you're on that too, there was one question that literally came in twice. The ranges, how small, like what's the smallest size that you would be interested in looking at from the perspective of a pre-purchase? Because remember, a lot of folks, they're trying to just get that pilot off the ground. They have a scale plan. Can you talk a little bit? Can you talk a little bit more about that as well? The amount of capital that you're willing to consider.
Yeah, we've made purchases of less than $50,000 when we've been onboarding projects for the first time. We've made purchases of $1 million. So we're kind of anywhere between those things. What we're really looking for, of course, one is the money we have available. We are capital constrained. We could be funding another 100 carbon removal projects if we had the money to do it. But the other thing we're looking for is where we can be catalytic with the money that we do have. So in some cases, that might mean a small purchase from a very early stage company because it's the right fit at the right time. In other cases, that might mean purchasing from a more established company, which might have you might make up a smaller percentage of their income at that time. So in that way, it's less catalytic, but maybe it leads on to other things, or it unlocks more funding. That all the different ways that can be catalytic, or it unlocks a new revenue path for that company, which even if it's more established, might never have had a philanthropic tax deductible way that people could engage with it. So we'll really look at how we can be most impactful with the money we have from a small range to a large purchase. And we've generally, in most cases, we haven't just made one purchase from a company and then stopped. We've usually been able to make an initial purchase and then follow on, usually, ideally, if things are going in the right way, then with a larger purchase from them. And we get to know them better as they develop more, as we raise more money. Our portfolio has just grown to around 20 projects now. So, we've gone from having, when we launched Terraset, we were partnered with Heirloom and Charm Industrial. They're still in our portfolio now. We're still making purchases from them. We then, I think, expanded to 6. We then moved that to 11 or 12 a few months ago. And then our latest round of purchases, which we announced this month, brought us to around 20 projects. And again, that is CDR across a whole range of methodologies, which is our primary work. We've also done a little pilot work in refrigerant destruction and methane abatement. Again, because those were things we were hearing from donors, hearing from the space, hearing from scientists that we should be looking at. So we talk about carbon removal, really we're thinking greenhouse gas removal as well. How does all of that fit together?
And I think, one of the things that continues to impress me and stand out about Terraset is throughout all of this, you've been open-minded, you've been flexible, you have learned very fast. I remember like one of our first discussions on biochar, and you're pivoting with purpose. And I think, you, Chris, Taylor, and the whole team, it's a remark. The people, we oftentimes get away from the people. I think one of the biggest learnings for our team at Grain, and it's part of the whole KYC process, is the people that are involved in the process are so critical. We could talk about offtake and feedstock, but even venture-backed companies, a lot of the early bets are made on people, and typically people that have track record. So you've built a really, really strong team. Now let's get back on. There's a few more questions that came in. We're going to save those because we've got a lot of really juicy topics to cover. I want to go back, Adam, to the question I get all the time, and I'll definitely provide some insights on this after you. Is the famous Valley of Death. Oftentimes, and I go to a lot of family office conferences and events here in New York, and I've invested alongside family offices in the past into climate startups. The question is, how can philanthropic and concessionary funds essentially better collaborate with project developers in private markets to bridge this Valley of Death? I would really like to see your perspective. And again, you and I have a really unique lens being here in New York City, and you in particular, because you also have ties to another financial capital, which is London. So we'll start with you, and then I'll provide a little bit of insight there as well from my perspective.
Yeah, I think from my side, I would say philanthropic capital can play a whole range of different roles, and philanthropic capital can be very powerful in a whole range of sectors on its own. But we really believe, as you said, in where it can line up with other forms of capital, where it can be a bridge to more, where a purchase from us might unlock investment or might unlock a follow-on purchase from someone else. And I think there's a few buckets you can look at it. You can think of philanthropic capital just as early catalytic funding in itself, which helps a company move somewhere down the path. I think that obviously happens at an R&D stage in labs at universities or wherever. It happens when projects are coming to market. That defining early and catalytic, they're words that can mean slightly different things to different people. It can take more of a bridge capital role. It can help projects move from a place where they know they are going to be delivering credits. They're going to be able to sell those. They are taking carbon out of the air, but they don't have buyers now. Where can it be a bridge to those? It can offer it can act as concessionary capital. It can be part of a capital stack involving debt. It can be used in a whole range of different things. I mean, for us, it's really, again, when we try and think about being catalytic, I like to think about where it can stimulate further demand or unlock further investment. And I can get into a couple of examples there of projects in our portfolio. There's that are not necessarily even biochar projects, but Octavia
Well,
Carbon. Oh, we got it. You want to
save that one for 2 seconds because we are about, and it's a question we're getting is, can you share real
Okay.
projects? So we're going to go there
Yeah, okay.
in 2 minutes. And Adam, you're going to talk a lot about those projects. I just want to add a couple of very important points because I know you know this, Adam. Obviously, we're looking at this from a global perspective. I was lucky in my career that I got to spend a lot of time living and working across Middle East, Africa, and India. I recently was very fortunate to provide a talk at the Bahamas Business Forum here. And to your point on the topic, I mean, it's not just a market gap. We are dealing with a structural failure. And nature-based and biochar projects are facing, delayed and fragmented revenue streams. This is the issue I always have is the expectation, the onus on developers is so high. So unlike traditional project finance models, which is my past life doing microgrids and as a service in private equity, which might demand a faster payback and rigid collateral, we need to look at proven tools that are better suited. So when I think about this question, Adam, I'm looking at, debt for nature swaps. And those are essentially agreements that are, for all intents and purposes, reducing existing debt burdens in exchange for commitments to invest in ecological restoration, such as biochar-based soil regeneration. I think we're going to hear a ton about this at COP 30 in Brazil. You've got different green bonds. You and I, Adam, have talked a lot about performance insurance, and one of the things Grain is trying to do is bring on more performance insurance, technology performance insurance, and risk mitigation products. So when a project gets to Terraset's desk, we're ensuring that the investors and donors are protected if a project underperforms on key metrics, or we want to de-risk early stage participation. And then the last thing I would stress, and then we're going to get into real project examples, which is the meat and potatoes of this discussion. It's what people want to see. But also, I spend a lot of time, myself and my co-founder Ryan, looking at flexible capital structures. Think about revenue-based financing, where investors are repaid based on actual sales, or concessional loans. We've worked on a couple of concessional loan projects. These are low interest loans with delayed repayments. Again, some similarities to debt for nature swaps. But the point I want to make, and then we're going to go to the projects, is these tools aren't theoretical. They are being applied. That's one of the reasons, Adam, I approached you and I wanted to have this talk together, because it's so important that our community, all the people that are on this call that we interact with on a daily basis, understand that we can help move them from concept to execution. And Grain, Terraset, and other key strategic partners can put together the right blend of philanthropic, public, private capital, as we call the capital stack. We've got some great content on the capital stack on our YouTube page, on our LinkedIn page, on the Terraset LinkedIn page. So it is an exciting time and things are happening. And with that, let's talk about real projects. And maybe, Adam, I'll kick off, and then I'm going to hand it over to you to take the reins to share a little bit more. But I could not be more thrilled about some of the things that have been happening in the space. I mean, the feedback I got 3 years ago was, bring me to show us real projects. And well, we are there now, and we're continuing to try to put things out. And this is a new announcement. For those that have not had the chance to see it, you could check it out on our LinkedIn page, and you could read more about this work. But it further highlights the work that Terraset is doing and the role Grain plays to de-risk and accelerate MOUs, LOIs, and term sheets. And essentially what you're looking at here is a pre-purchase, around 1,000 tons of carbon removal. And it's from a project that is really near and dear to my heart. I mean, again, I think about Pyrogen, I think about their leadership team, I think about the early discussions we've had for years about approaching biochar as a credible, investable, and scalable solution, really a core pathway to permanent carbon removal. And the way that this went down, essentially, as many projects we've seen that have been successful, project developer engaged with Grain. We worked closely to try to understand how do we accelerate the readiness and pick the right offtake strategy? But at the end of the day, this goes, Adam, to my point on how critical teams are. We really bet on the team on this one out of the gate. Phil, Adam, and his whole team, really impressive group that was committed to basically this core of carbon, concrete, and community. So enabling low carbon, affordable housing to support local economies and demonstrate how carbon markets can drive lasting impact where it matters most. And my perspective, and I'll hand it over to you, Adam, is, not only does this retrofit cut CO2, but it's narrowing the green premium, it's boosting output. You don't need subsidies. And as I've said, recently, and I said this in Washington, I think a month and a half ago, we were meeting with policymakers, clean tech isn't climate virtue, it's strategic muscle. And that is exactly the kind of muscle that's being flexed on this project, as we've got a high integrity scale opportunity to remove carbon globally and unlock capital infrastructure needed. So, Adam, I'm going to turn it over to you to share your perspective on this project from a Terraset lens. And then we'll talk a little bit more about some of the other incredible projects that you've started to allude to that you've unlocked over the last handful of months.
Look, number one, and I think it's really important to say, there will be fewer greenhouse gases in the atmosphere because of this purchase, right? That's what we exist to do. That's our work in this space. But what we loved about Pyrogen when we met them, as you say, of course, it's the team, and every project that we support is going to involve like getting to know the people. But it's also their methodology, and you touched on this. I think what's so amazing about biochar, and we've talked about this before, is the number of co-benefits, which could be anything from soil quality through to employability, a whole range of things. Something I loved about this one is the feedstock is an invasive species in Kenya. It's an invasive plant. They want to tackle that. It is producing low emissions concrete. So when you're looking at all of the building that needs to happen in Africa, will happen in Africa in the years ahead, we know that's a whole space that's talked about as being hard to abate. Here is a model that is producing low emissions concrete, which is going to be incredibly impactful. It is focused on using that for affordable housing, which is something that's absolutely critical. It is creating jobs in sub-Saharan Africa. And Jason, you know this, like my past life before this is not in climate. My role before this was running an international nonprofit founded by Nelson Mandela. So work in sub-Saharan Africa is near and dear to my heart. And it's amazing seeing how Kenya is doing incredible work in this space, kind of as a nation in this biochar work, also in direct air capture, also in other areas that it's really becoming a hub. And I think there's so much potential in sub-Saharan Africa for that to continue. But Pyrogen,
and Adam, to your point
yeah.
too, is as Mandela was always big on overcoming the impossible and the power of education. And I think about this also as setting up those, setting up the wherewithal and the know-how. Even Al Gore was just in Kenya, just literally, like I think 2 weeks ago, highlighting the importance of that region on the resilience to overcome climate change. So the unity and humanity from and then the leadership and service element, it's all kind of compiled into this project.
Yeah, absolutely. And I think it's going to be impactful. They have exciting stuff. This is always the challenge. They have exciting stuff going on, but it's not our place to talk about, but that I know you and I both know about. But they're going to be a really exciting organization to watch in the near future, well, and in the long term. But they have some great things happening, and I'm excited to be working with them. I think as well, I mentioned direct air capture there. Let's talk about Octavia. I always think that they're a great example. They're not biochar, they're a direct air capture company in Kenya. What I love about our involvement there is that you asked before about the different size of our investments. I believe that our first purchase from Octavia was less than $50,000. I would have to check that, but it certainly wouldn't be much more. I think it was probably less. We've since gone and we've done other rounds of purchases from them, and we've moved more money that way. But what was really interesting is that a couple of days after we announced that first purchase, I got an unprompted phone call from someone at venture capital firm that was looking to invest in Octavia. And we just became part of their due diligence, as in we were a reference call, a scoping call. They were asking us about the process of being a buyer. They were asking what our experience with the team was. They were asking about, the whole picture. They ended up going forward and putting millions of dollars into that project or being part of a multi-million dollar round. Now, I don't take any credit for that as Terraset. They've invested because of the strength of the projects. But again, when we think about the ecosystem, that's that's what can come from funding. It's what can come from being a buyer. It's what can come from having some level of involvement that gives other investors in whatever form some more confidence.
And
And
it's building what I'm hearing you say is it's really building strength on strength to make these projects more accessible and affordable. And you're redefining how climate leadership looks because you're making the investment, you're helping the team, you're working cohesively with this team to accelerate, and then all these other investors, it's work like are coming to you to diligence and move forward on it. So this is regionally grounded, high integrity stuff, but it starts with a few $1,000s and some momentum and some credibility.
And look, it's you're kind to say to put the climate leadership on us. I would go even a step further. It's the donors and the people backing us who are saying, you know what, I care about this work and carbon removal, not because of my own corporate accounting or something I have to do here. I believe that I want to be having an impact in this space, and I am going to donate to Terraset because they are a way, not the only way, but they are a way that I can have an impact in this space, and they donate to us. And you see that the other example you have on this slide of where we can try and grow that impact is Charm Industrial. We knew last year, I think there was a point we knew we had the potential to move a significant amount of money to our partners at Charm Industrial. And we were able to use that and go and talk to other people in our network and their network and say, hey, we've got this opportunity. We could actually maybe unlock some more match funding here. Are you interested in supporting it? And we ended up unlocking a couple of $100,000 on top of what we expected to support them with. Some of that flowed via donation to Terraset and we made a purchase. Some of it didn't. But having the conversations and talking openly about like what we were doing, what we were trying to do, the things we were seeing, the money that was coming to the table, through us, helped unlock it. And I think that again is if we are intentional in our collaboration and we think about like not just how can we announce something that everyone says, oh, that's cool, but that like is just the start of something is what we need in this space. Like nothing we do is ever at this time the end goal, right? Like we're too early in the sector. Everything we do has to be about unlocking the next step and ideally multiple next steps.
And I love that a lot of these, like you think about Charm, they're operating at this very unique and necessary intersection of manufacturing innovation and climate science, which is so crucial right now. I mean, we need technological innovation and support structures. And I know there's been a lot of questions to pontificate about the big beautiful bill, and we will put some inferences and reference points on that. But domestic manufacturing for pyrolysis and gasification, as it relates to biochar or for carbon capture, is strong right now, and that's a company that is really leading the charge there. And then Adam, you nailed it, right? I mean, the only way to turn billions into trillions is the power of the unlock. You just have to do it. You have to unlock capital, and you have to move forward. On this topic, just one question. There's one question that seems to have a thematic in the thread that relates to these projects is when you think about the amount, is there a floor in terms of how many tons of CO2 per annum a project has to remove for Terraset to be interested? Obviously, one of the reasons Grain exists is to help align with the best methodology and to calculate how many removals per annum, looking at the thematic and looking at the carbon calculation. Can you speak to that a little bit more in depth in terms of what you're looking for as it relates to removal credits, the amounts?
Yes, I can. And I could probably do it in a couple of different ways. So one is I would say we're really thinking about the scalability rather than just what happens right now. We know this is an early space, and biochar is further on than many other methodologies or hypothetical ways this could happen or things that are still just coming to scale. But we still know what matters now is not that we purchase 1,000 tons and that happens. It's how that gets to ultimately as a space to gigaton scale. So really the scalability is what we're more interested in than just right now. And I would also say we're potentially a bad example for this because we quite actively try not to think about the price per ton as the be all and end all. And other people might have to, right? Because if you're approaching this from a perspective of your looking to address your carbon footprint, or you have a certain amount of money and you have to find a way to buy a certain amount of tons, then you're going to be thinking about whether it's going to cost $500 a ton or $150 a ton or $75 a ton. We definitely think about that as part of our process, but we are also willing to pay more per ton now if we think it will have a greater catalytic and scaling effect, whether that's in terms of because it's a methodology that's yet to scale and the price curve needs to come down, or because it unlocks things in another way. So we don't have a particular target that we are looking to hit in terms of we must remove this many tons. We're really thinking about like how can we move the most money, how can we help the most projects come to scale. And I've got to say, like a real shout out to others in this space, the likes of Frontier, who've brought together corporate buyers of carbon removal, or Symbiosis, who are starting to do that with nature-based solutions. Like, again, I think they would say, I don't want to speak for them, of course, they would probably say a similar mindset, right? There are much cheaper ways they could have bought carbon removal or they could have focused their funding, but they are really thinking about like, what do they believe is scalable? What will the cost curve look like in the future? How will the most carbon be coming out of the air X number of years down the line rather than just what we buy tomorrow?
Yeah, and it's important, obviously, I think, from a integrity perspective as well, who you're taking money from, who you're investing money in. And no doubt, I mean, Frontier helped to pave the way and get a lot of this stuff moving. One tie on, Adam, too, that came through the chat that I think it just makes sense as an add-on to that was, are the credits retired in the name of the donor or by Terraset? And then who gets the rights to the purchase credits?
So when we buy a credit, we are buying it as Terraset. It's a great question. The donor gets a tax receipt for donating to Terraset. They do not take possession of credits because then they'd be taking possession of goods or services that would not be tax deductible, right? They're getting something for their money. When they donate to Terraset, they don't get anything for their money. They get a tax receipt and they can tell the IRS, I gave money to a nonprofit. We take possession of the credit, we retire it, or in the case of the revolving fund, which I spoke about, we hope to be able to resell it and plow more money into pre-purchases. Now, what those donors, of course, can do, as you can do with a donation to any nonprofit, if you give money to the American Red Cross, you don't take possession of a certain number of first aid kits, but they'll tell you, here's what we're doing with that money. We will very openly tell a donor, your donation is going to allow us to purchase 1,000 tons of carbon removal. It's going to allow us to purchase 500 tons of carbon removal. That donor, we hope, goes and shouts about that to everyone. Like, we gave Terraset money and it allowed them to remove 1,000 tons of carbon removal. Like, that's fantastic. We want more people to hear about that. We are trying to scale, but they don't take possession of the credits.
And Adam, one more. This is actually a really juicy question. I like this one because we have so many conversations about timelines as it relates to feedstock, offtake, etc., and qualification. What's the sweet spot term you like to see when it comes to the actual offtake of the biochar? Is there a sweet spot where you'll make it makes it easier for you to make an investment? What level of flexibility do you have, especially again, keeping in mind there's lots of elements to these projects, knowing that, hey, that capital might unlock the ability to accentuate and elongate the amount of time you could have an offtake in place. But how do you approach that as well?
Again, I think we approach it with a lot of flexibility to try to to try and think of where that can unlock additional impact or additional funding. A couple of examples of that. We had agreed a purchase with one developer, and I believe, I mean, it doesn't matter for the sake of the example, but I'll try and be accurate anyway. We'd structured that they would deliver to us in 2027. And then a corporate buyer came in and basically wanted to buy out everything they thought they'd be able to deliver in 2027. Right. That's good news. We are not trying to be a barrier and say, oh, no, we already purchased that, so that money can't come in. What we were able to do was then be flexible and say, no problem. Like, here's how you can plan the delivery to us in 2028 and 2029. So we still get what we paid for, just on a slightly delayed timeline. More money comes into the space. They're able to work with that corporate buyer. And again, I think that's somewhere where the flexibility of philanthropic capital can be very, very useful. We're also having a lot of interesting conversations now, a couple of lenses. One is technologies or methodologies like enhanced rock weathering, where credits are delivered over a number of years. You might have someone whose mandate is to purchase credits for the next 3 years, but actually there's sort of 5 years of delivery there. Like, what happens with the tails of those, and what's the role that we could play there? And talking to other buyers, let's say, particularly people who might be looking at larger offtake deals, who are like, well, how can we line this up? So you make a pre-purchase now and we have a follow-on offtake from that. And how do we structure that in a way that is smooth and easy for the project developer, that maximizes the money we're putting there, because maybe actually, 5 times what we can commit to now ends up being paid for, and helps the person with the offtake agreement because we have upfront capital to put into the project. So I think we're really flexible with those timelines, depending on like how that can most fit as part of the rest of the stack.
No, well said, Adam. And to that point, too, I'll answer a question directly. There's a bunch of questions about, what standard is being used for biochar production. Are there preferred standards? My feedback on that would be, there's 4 main ones. There's Isometric, Puro, Vera, and Climate Action Reserve. All of them are highly credible. We work closely with all of them. Everybody on this call can go to grainecosystem.com, go through our jobs to be done, and go through the different methodology types to see which one might be the best fit for your project. All of them, and Adam, I'll come to you in a minute just to get any perspective you have on the methodologies. I'm fairly certain Terraset is looking at all the accredited methodologies as it relates to biochar. Of course, many people will approach us and there's an assumption that it's corks. They need to produce corks, and that speaks to the power of how great Puro has been at building that cork brand, which is fantastic. But just to let everybody know, you have options, and there's different fits for each of your projects. I highly encourage you to go through our jobs to be done to really understand what does it take to do a biochar project, because there are lots of different parts and pieces, and that's certainly why we exist. I guess, Adam, do you have any commentary from your perspective on the methodologies or the standards that you'd want to highlight? Again, I know you've worked closely with all of them.
Yeah, I would say exactly as you said. We've purchased from companies working with all of those standard bodies with different registries. I think it's what's the right fit for the right time. I think it's a whole interesting extra debate we could get into about how this looks complicated to someone who's approaching the space for the first time from the outside, maybe with some budget, and how do they know what good looks like? But from our perspective, we're confident that all of those that you mentioned and others are a great reference point for what good looks like.
I think so. And again, just kind of coming together with a summary here, and then we'll be able to do 1 or 2 more quick questions. If you think about the discussion we had, I had somebody ask me, can you give me, and I've thought about this for a couple of weeks, because I've had folks ask me, like, how would you describe grain and Terraset as it relates to the broader carbon economy? And I think about it like this, Adam, and I love your perspective. I think of it like, and this probably comes from my past life doing a lot of working on a lot of big building projects, building automation, control, decarbonization. But I think of grain and Terraset like the scaffolding and the foundation for the carbon economy. Grain is, if I think about even those questions we just answered, grain is helping developers to stand up real projects with the tools, the data, the structure to scale, because scale is really important. And then Terraset is bringing the early capital and confidence needed to start the building and keep building, even when the market isn't ready. And let's not fool ourselves. We're going to keep having ebbs and flows. And I'm probably, Adam, we should probably organize another webinar as a follow-on, and we can go even deeper on some of the elements around public, private, and follow-on capital. But I would say, together we don't build the building for you, but we're making sure you're not building the building alone. And I think that is hypercritical as I really reflect on the value proposition that our companies will bring to the table as more and more. Hopefully, Adam, next year when we're doing this call together, it's 100 projects, right? If you think about the one thing I would encourage the group to, if you found today's discussion interesting, Adam and I did a talk during Climate Week last year, which is on YouTube. It's on the Grain Ecosystem YouTube page. Very easy to find. And interestingly enough, we address a lot of the questions that are in the chat. Not all of them. There's a lot of net new questions that we've addressed today. But a lot of these questions I'm seeing that have popped up, Adam and I talked about this at length in New York during Climate Week. And the cool thing, Adam, is we've delivered on a lot of the stuff that we were not even pontificating about, really feeling adamant, because we felt confident both in the developer community, the state of markets, and the work that we're doing. So I guess, Adam, in closing, how would you leave this community of stakeholders in terms of, think about it as many of these folks are early innings or they're getting closer to doing a project. What words of encouragement and final thoughts would you want to provide and put out there?
I'm glad that we've moved some work forward in this space, because I know in that conversation we said we're going to do some biochar work. So luckily we now have done. When people go to watch it, we do what we say we'll do. And to the investors here and potential donors, I'd say we do what we say we'll do, and please support us as we drive this forward. To the developers, the project suppliers who are looking to build this work and build these projects, we see you. It's hard. It's hard to do this work. And I actually think it's one of the big strengths of being part of an ecosystem, part of a network, part of a movement, is to know you're not doing it alone. And I talked about this on the Terraset and Grain Ecosystem, but I would say even amongst suppliers and developers, like, of course, everyone is competing for a certain pool of capital, but that collaboration has the potential to grow the pie rather than scrabbling over small slices of it. So you're not alone in this work. If you are facing challenges, other people on this call will have faced those same challenges. And again, I think it's why Grain Ecosystem provides a great framework for that. We're always happy to be like, yes, you should talk to this person, this person. We might not always have the money to support a project, but usually we can point them to someone else who's facing similar challenges. And together, hopefully, we can keep this space moving forward.
Look, it's always going to be. I'll close by saying this. There's been a lot of discussions about data and digitization, et cetera, et cetera. But 100% of the folks that are involved in these projects are people. If you don't understand people, you're not going to understand business. You're going to struggle to do real work. And what I love about, first of all, the partnership with you, Adam, and your team, we sit down together and roll up our sleeves and we actually look at these projects live and we have real discussions. And then on top of that, both of us and our teams are traveling all over the world, meeting with these project developers. Again, most of the projects that do get published on Grain, they've gone through a rigorous process, and we've had a chance to go on site. I spent a couple of weeks over the last few months just going all over the US and going across Europe and other parts of EMEA looking at project sites. So I think you nailed it, Adam. When the trust account is high, communication is easy, instant, and effective. And the quickest way to build trust is to do what you say you're going to do. And I think that's a great way to round this out, because clearly I think our teams have been committed to it, and we are doing that, and it's evidenced by today's call. And like I said, I am just so excited by the engagement in the Q&A. Again, everything we did not get to, we will respond to you, I promise. I know we've been responding live as well, in the chats, but there were over 35 really insightful questions, and many of them, Adam, did dovetail to what you said. So with that, we are going to wrap. This will be the first of many. Stay tuned for more posts on both the Grain Ecosystem LinkedIn and the Terraset LinkedIn pages. And again, we posted the YouTube link to the talk that Adam and I did last September. If you found today interesting, I highly encourage you to check that out. And in the interim, keep at it. We'll see you again very soon. Have a wonderful rest of your day wherever in the world you are. And Adam, thanks again to you and your team for being here.
Thank you so much. And thank you to everyone for joining.